Hello, everyone, and welcome to another edition of the Forex Technical Market Update for July 29, 2015. And another month has almost finished. Okay, in front of us, we have a chart of the US dollar versus the Australian dollar, and we have a pretty nice downtrend going on in the USD versus Australian dollar. But we did have a recovery candle that was made yesterday. And this is very critical because if we see a close below this recovery candle level, that will definitely mean that the market continues to be weak and we will see further selling. But if we do get a close above, I would say 75, the 7500 level or 75-cent level, that would be could indicate that we are in for a larger recovery in the Australian dollar versus the US dollar. Okay, taking a look at the Japanese yen. The Japanese yen is weaker against the US dollar this morning. And I have been speaking about the fact that the Japanese yen is mirroring the stock market, and we see that when the stock market is recovering, the Japanese yen is weakening, and when the stock market is declining, the Japanese yen is strengthening because the Japanese yen tends to be a crisis currency. Anytime we have crisis, the Japanese yen strengthens, and you saw that phenomena in 2008. Okay, so we're in a consolidation pattern with the Japanese yen, and you can clearly see the triangular consolidation pattern here on the daily chart. It closed above this down trend line here would be fairly bullish, and the market could test the 126 level. But we are still in a consolidation pattern. And to be quite frank, most of July we're in consolidation patterns with most of the currency pairs. As you can see, look at the euro. I mean, we started July opening up at 111.42 and we're at 110.28 now. Very tight range in the euro this month. And this is just typical of summer trading where we have very tight ranges. So the euro is down slightly today, and we are in this triangular consolidation, and the market has to break out of these consolidation patterns for us to get further clarity as to where the euro will go. A close below 108 will definitely be very bearish for the euro, and we could see a test of this 104 region. So the Japanese yen is down against the US dollar. The euro is down against the US dollar. The Canadian dollar is strengthening against the US dollar. The Canadian dollar and the British pound this morning are doing fairly well. And this Canadian dollar could be in response to, remember, we spoke last week about this old high in the Canadian dollar near this 130 level. As you can see, the market traded up, made a new high, slight new high of 131.02, and is backing off of that level. So this area is acting as pretty significant resistance here in the Canadian dollar. That doesn't mean the market, go back to the daily chart. That does not mean the market can't stabilize somewhere here and attempt again to take out the level. That is all possible, because what we see sometimes is that as a market approaches a area of resistance, we normally get a reaction off of that level. So that's why if you're a scalper, it's very important to look out for areas of support and resistance, because when there's evidence that this market is running out of steam, you could take advantage of the inevitably decline in the market. Okay, taking a look at the British pound versus the US dollar, and we are up considerably this morning, and now this market has reversed and has hit this area of resistance. Take a look at this area of resistance on the chart. Let me just take off these Fibonacci retracements. It's a 4-hour chart here. And we see that this is the fourth time the market has approached this 156.50 up to 156.80 level. We see the market once backed off. Again, it backed off. And now the market approached it again and is backing off again. Again, that does not mean that the market cannot recover and then trade through it, but that means there is some. Uh, all that means to us is that there is some supply up at this level. That means that there are some sell orders that are being filled at this level, and the market just cannot seem to overcome it at this point in time. And the market may just it may just overcome it, but it's just not doing it right now. So on the British pound, the boundaries are clearly labeled. A close below 154.50 would be very bearish, and we would see a return to this low of 153.50, and a close above this 157 area, 156.50 to 157 area, will be bullish. And we could, if that happens, we could see a retest of this 159. Actual high is 159.30 with the British pound. British pound, Japanese yen was doing well this morning. It's still doing well. It's up against the Japanese yen, and we are currently trading at this resistance level. And as you can see, the trend line coming down. The market is trading at the trend line at this point in time. So we are going to wait and see if we'll get a sell. The market will back off of this trend line, or the market will punch through it. Right now, the market is backing off slightly, but the candles are not completed as of yet. And oftentimes, when a market hits the resistance level, we do get some sort of reaction, and which could be temporary. Okay, so that is what we're looking out for in the Forex markets this morning. Now, if you'd like to have the trading signals sent to your trading account automatically, you can click on the link below to get started. Now, I can say is a good time to enter because the markets are in consolidation, and sometimes when the markets are in a breakaway trend, that's the time where we're seeing profits in accounts. And when the markets are in consolidation, we're just waiting for the markets to break either way. So now is a time to get involved, and if you'd like more information, click on the link below this video. Thank you very much for listening, and have a wonderful morning.